Hey everybody, it is Sunday, May 1st, and first and foremost, would like to apologize for having missed on Friday. I I lost my 5-year-old daughter to cancer a little more than a year ago, mid-April, and due to the volatility that we had in the market, earnings starting, OPEX, I didn't want to let you guys down, so I delayed going back to the beach where we scattered her ashes, and Friday was it. It was enough. It's time to go be a dad. So again, apologize for having missed on Friday. Obviously, Friday was pretty volatile. A lot of people have a lot of opinions, a lot of feelings, and again, I am here to take all of your feelings and opinions away. Opinions will always be there. We've always got two alternatives, and I'll show you when we go over this, like I was mentioning a few weeks ago. And that's obviously what came to fruition. And what we're going to be looking at here is very close term, Monday, Tuesday, Wednesday, very close term, the major bottom being placed, and you are going to get a minimum of a 3-wave rally, minimum 3 waves going up, bigger than you can expect to see. So 95% of you have never been in a bear market. 80% of you have never been in a correction. So put all the stuff that you're reading and seeing people tweet about and making videos about, put it aside. Let the charts tell you what the charts are going to tell you, because the charts are doing exactly what they were going to do, telling you what's going on, telling you where we're going to go. Here we are for the year. We had our big drop there on January, 12% drop, 8% rally, almost 9%. Then we had our drop there into the Russian invasion, an 8% drop, had your 7% rally, your little dip, and then bam, that 11.5% rally that we had there in March. Here we are into this big megaphone that we were producing. We had a little bit of a 3.2% bounce over there in the middle. That was when I told everybody get out of those 45.13 area. We had this little bounce here, 3.5%, which again, I'm going to cover these little bounces as we go through this. And here we are. We've had an 11% drop since that high over there towards the end of March. We're right down here on a double bottom, and we're not done yet. I'm going to extend this here as of now, and I'm going to show you a couple of alternatives, but we are very, very close to this bottom being placed. And I'm going to go over just some general charts real quick, just to take a little bit of the noise away. Here's a 1-year S&P. If you look over here on the RSI, you can see you've got a major buy divergence on your RSI. Okay, you're right down here on a double bottom on your multiple bottom level over here as far as this correction goes, and back over here you've got your May bottom, your May double bottom, as a matter of fact, over here at 40.56. We'll come back to that in a little bit. Down here, obviously I've extended the screen a little bit. You can see here your money flow is completely depleted. You can see how it happened over here in March. You can see how it happened over here in February. You can see how it happened over here in September. Once all the money goes out and it's empty, all it can do is fill back up. Therefore, money coming into the markets, just like you see here off of the September oversold, bang, big money come in, a little bit of a dip, and then we had that massive rally over here into October last year. You had your oversold over here in January when we had that correction. Bam, money comes in. We had the bounce. Drops again, money comes in. Had the bounce. Drops again, money comes in. Had the bounce. Here we are in a 4-week depletion, which I'll cover as we move on. The NDX, I'm going to end the video with the NDX because obviously, like I've told everybody before, the S&P is your torso. It's your belly button. It's from your waist to your chest. Your strong arm is your Dow Jones. Your weak arm is your Russell 2000. And your legs are your Nasdaq. You can break your legs and you can still crawl. You can break your arms and you can still run. But when all of it is broken, you're not going to go anywhere. And that's what we're going over here as we go through this. Now, what I'm highlighting here with this green pivot line here is the September of 2020 high. And I'll show you how that works when we go on to the charts. Here's your September 2020 high. Here's your March 2021 low, the lows of the year. And here we are coming on to this double bottom, which is breaking right now. And I'm going to show you how it's expected to go a little bit lower. Where it goes lower is precisely how we've got two different alternatives on that. One of them goes ahead and gives everything to the 99% of people that are all saying we are bearish. When the majority of the population is leaning on one side, the market always tends to go the opposite way. Few of you were here back in December 2018 when we had the first correction since we started doing 32 trades in the beginning of 2016. We had that drop off in 2018, and I'm sitting here 2 days before Christmas, the day after Christmas, the few days before the new year, and I'm banging the fucking table saying, buy, buy, buy. And what happened? It's exactly what took place. We had the ramp off of that 2018 bottom, but everybody wanted to lean, oh no, it's the end of the world. We're going back to the dot-coms. Here you are, Nasdaq, big pivot point. I'm going to cover here when we go on to my charts. Fractionally with a buy divergence here on the daily. I wouldn't give it too much weight, but again, over here, massively oversold on your money flows. Every time you get oversold on your money flows, you get a little bit of a bounce. Here's your Dow Jones. The Dow Jones is this is the strongest index that's out there. You are fractionally holding this 33,000 level and not being able to break it. You're barely creeping on 10% from the all-time highs on this 33,000. And you can see here just how it's been a massive holdover. And people are going to come out and say, yeah, but look at this rolling top you've got going. You're going to roll over here. You know what? Go ahead. I'm not going to stop you. Here's your Russell 2000. Again, another one. You had this plateau for over a year of nothing. And then as October came through, bang, the big breakup for the throwover. And then you had your correction. And you can see down here, you're doing the exact same thing. And again, guys are going to come over here holding this 189 level saying, no, this is the end of the world. It's the end of the world. This is where your big top is. And now you're going to roll over and you're going down to the 150s and 140s. Okay, have your opinion. I hope it works out for you. And now I bring you on to the VIX. Okay. And the VIX ended here, peaked at 34.34 at the very end of the day on Friday, closed at 33.40. You're up above 30. And you can see all of your peaks here that where you are, you're up above 30, 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 up above 30. Now, I went through and spent some time on Wednesday to show you Donald Trump's election run, like I've shown a dozen times before, 37.86%. I might be off by a fraction. And then he had his 11.83% correction. Very quick, bam, 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 and I've showed you the results after that, and it's even in this email from Wednesday. Here's Joe Biden, 34.48% run off of his election, and he had a 14.61% correction. You've got two different scenarios here, okay? Donald Trump was coming off of almost a year and a half, 2 years of the entire stock market going flat. 1,800, 2,100, that was the range that we traded in from the end of 2014 until Donald Trump got elected. After he got elected, we broke out of that level. We had a little fractional move above that after Brexit, for those of you that remember that little run-up that we had into August. Here you are with Biden having a 34.48% run after the market is already up over 50%, 60% from the COVID lows, the biggest low, and well up over 100% when you're up here, which is your 43.84 line. And here we are, 43.28 on this chart alone here, 14.6% drop. Showed you here, this was how Donald Trump's wave 5, after it bottomed over in April for the fractional double bottom and started to fractionally grind up to the all-time highs at that time in 2018, where it broke around August above that level, the end of August. Here was Joe Biden. This was going into Wednesday, how he was coming down here and just having what could be referred to as a bullish wedge that's forming down here off of this base here at 41.98. Now you've got your drunken VIX that I covered going over 30. And I had Hedge Eye, which was nice enough to share this chart going all the way back of when your VIX is over 30%, what happens within the next 30 days. 2015, you had your 5% run. Over here, 2017, 2%. Over here, after Donald Trump got his little dip, 13% run. Then you had over here the 8% that didn't work because it was right after COVID, and COVID took a little bit more than a month to take place. Then you had your 6, your 8, your 9, your 4, and I went through since the end of that chart and showed you how it's happened 5 times since. Happened on December 3, January 24, February 14th, February 22nd, and it happened again at the beginning of last week. Boom, 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 there's your VIX. You had a 7% run, a 9% run, a 3% bounce. Then you had the invasion. Then you had that 7% run off of the invasion. You had another 3% run off of that little bounce, 11.5% from March 14th to March 29th. And now we are here again where we've got that VIX cluster over 30. I'll go back to an article here from 2015, and I hate CNBC with a passion. I hate everything about CNBC. I've been on CNBC, and I still don't like it. But here back in September 2015, when we had never raised rates since obviously everything took place in the financial crisis, we had never raised rate, and this article goes on about how the Fed has never increased rates while the VIX has been above 25. They've never done it. I implore anybody to go out and do their homework, to go out and look, because if I can recall from memory, when we raised rates recently, we were prior to the raising of the rates right above 30 on the VIX, and then suddenly out of nowhere, boom, the market started to rally and the VIX started to drop, and we were well below 30 when we actually got that rate hike. So again, it's an article, it's all that it is, and it's well dated going back to 2015. I saw somebody with a stat like this. I don't have it, but it was out there. So anyway, like I said, I've covered the VIX already. We've closed it above 30. Here's your CPCE, your call put ratio. And up here above 70, you can see where you've got your other spikes coming back. This is COVID, where you've got all the here to 128. This is over here at the end of that December drop in 2018. And this is Brexit. These are your times when you've been up here above 77. Right over here above 70, right here, that's your January of this year. So you're already having everybody lean excessively hard to the downside with the puts. Whereas when you get down here over into the 40s, that's when you've got everybody leaning a little bit too far into the calls. So again, you've got another indicator here saying that everybody is on the wrong side of the fence. The next 3 days, you're going to find out whether or not that's right. But anyway, I'll come back here onto my spreadsheet, which I implore everybody to make their own spreadsheet. Make a spreadsheet with the data that you need to have so that you have everything that you need to see. April was a complete bust. 1, 2, 3, 4, 5 gap downs in a row, which I covered, had not happened in 3 years. May 2019. 6 was the limit on that. We got that little bounce over there on the gap up, but then again, we still kept going down. For the entire month, we're down 9%. Everybody's throwing the stats out there. It was the 13th worst month in the history of the stock market. We ended year over year, down 1.18%. We've now got 5-day average range over the last 5 days is over 100 points on the SPX. That's volatility on a billboard, glowing in neon, flashing, wearing a thong. Down 155 points, close over close, after being up 103 points the day before. That's a lot of shaking and moving going around. And you can go over and you can look, if you have this kind of data, how many big drops like that we had. Here was the one on March 7th, down 128 points. We closed down again the very next day on March 8th, and then we had that little bit of a bounce. Never had a big day like that other than that. 155 points down. I got to go back to COVID, and even with COVID, it's nothing there. But again, you had your bounces, you had your drops. Here we are. It is what it is. Weekend Wall Street. This is not something to go and drive blindly by. But as of right now, weekend Wall Street is showing that the Dow Jones is looking at a 42-point drop on the open when we get open here later on tonight. 42 points is not much, not much. But anyway, it is looking at a 42-point drop as far as this is indicated right here. Related markets, FTSE, here's the S&P 500. I don't believe in this data to follow on, but right now it's showing that we've got a 10-point gap up on the S&P 500. It is what it is. It is what it is. Here's the S&P weekly, okay? You've just had 4 consecutive red weeks in a row, and you didn't take out the February lows. I can't sit there and bang on the table hard enough to tell you how bullish that is. But my time frame of looking forward over the next few months at the end of this wave coming through, and a guy going on and trading a 1 day, 1 minute, weekly, and overexposing on the call side. Again, that's why I offer the one-on-one calls, so that you can take the time to use my brain and take my opinion. I've only been doing this 27 years. I only manage my own fund that's got 38 million in it for private clients. If you want to take up the opportunity, go ahead. If you don't, that's fine. I won't take it personal. But what I see, and I'm going to go to the charts here first. So here's where we're at, right? This is what it looks like from a percentage run point of view, and with, a lot of big pivots, This blue line, I wish I could show you this blue line, but I've got too much data on this chart. But I'm going to take you to the video page. And here you get a little bit more clean of a look. You can see you've got your wave 1, your wave 2, your big wave 3 down into the January low. Then you had your bounce up there to February, where we topped out at 45.95, 45.90, almost closing in on that right there, that 45.82, and negating everything. And then you had your wave 5 drop, 14.61% right there into the invasion of Ukraine. Then we had our ABC. ABC, boom, boom, boom. We got up here to 46.37, and I'm going to bring you onto another chart in a second, where, if you remember, I was saying this could be a big bear B. Doesn't look like it, but it could be. Wound up being that anyway. Here was our drop, the 1-2. Implored everybody, get out of here at 45.13. Where this dropped to from that, had no control. Obviously, taking out this level here at 43.75, 43.84 was a big level, and that was where everything ended when we gapped down here over at the beginning of this week. And I was saying, we're in trouble. We're in trouble. That's what I said last week in the video. We're in trouble. And trouble came up and bit everybody in the ass. Here was our wave 3. Here was our wave 4. And our wave 5 has the ability, to end here at around 40.81. It can obviously go a little bit further, down around this 39.79 area, very similar to how this 200 extension came off of this 1-2 at the beginning of this. Not using anything as it did it this time, so it's going to do it next time. Because where we've got, where is it? I believe, no, it's not there. God, I had this a minute ago. It's not wide view either, but wide view, I can show you that trend line, that's for sure. The SPX weekly, this was where I had you on the big bear B. And the big bear B, if we're going to go off of the top, down to that big low, up to that high there in March, the C equals A would be right there around that 39.33 area. Okay? So from here at 41.31, you're looking at another 200-point drop if you were going to have a perfect C equals A. Doesn't have to be a perfect C equals A. Doesn't even need to drop down there and have a completed fifth wave. But this is where I have the problem, okay? Here's where the major problem is coming in. And it's here on the NDX, the Nasdaq. The Nasdaq, you can see you had your 1, 2, 3, 4, boom, boom. Here was your A. Here was your B after the ABC rally. And then we've come into this just absolute wipeout that's taken place. You took out already the invasion lows. You took out the March lows as we came in here during the course of this week. And I'm going to zoom in here after this, right? As of here, okay, you're looking at a 1, 2, and then a 3. That 3 has not hit the 100 extension. And when you're going to go biblically on the Elliott wave, wave 3 cannot be smaller than any other wave. So it can't be smaller than wave 1. It can't be smaller than wave 5. But it's missed it by 35 points as of right now. So it hasn't come across that all the way to make this a third wave. So it should have a little bit more of a dip in it before it gets that little fractional bounce. And that fractional bounce, I wouldn't expect to be any higher than around 1345. And then it should go lower. Okay? And lower down here, why don't I have, I had it on the 180.60. Down here, right, in this zone around here. Now that's a major problem because this is the 1, 2 that a lot of people have. They're all using the same 1, 2. If we're going to come down here and break below 12,439.50, we're talking breaking this September high here from 2020. And if we break that September high from 2020, like we did here, and we close below it and don't get up above it very quickly, then that's it. All bets are off. And yeah, we are in a bear market because you can't be closing down here below this number 1 pivot and have that as your number 4 pivot. It's rare, but it's just not something that you want to see happen here. So again, we're in a little bit of a conundrum when it comes down to this. What I've got as an opposite is that this is your 1, here's your 2, here's your 3, here's your 4, and here's your 5. And this 5 would, for the exact same reason, be right in that range where it's not longer than wave 3 and it's just down there right before you get to that 12,439.50. And again, that major rush upwards to come from that off that. So, again, that's where we're sitting right now. And when I showed you there on the SPX, this is what we're looking at here is what you call a zigzag retracement. You had your 1, 2, 3, 4, 5. You had your ABC. This is coming here into your February low. Boom, boom. That's your March high. And here we are here, 1, 2, 3, 4, 5, with your 5 taking out your prior low. That is a standard, typical zigzag retracement. That's what we have, which is basically on the table, that we should go fractionally lower than where we already ended up. One of the other things I'm going to bring you up here is the futures going into Friday. I keep the 1 hour futures on the screen constantly. These lower Keltners, when they get hit, that typically ends whatever kind of run you have, either to the upside or to the downside. And here you are on Friday coming down. Boom, you hit your lower Keltner, tag the lower Keltner over here on the Russell. Oversold on the 1 hour, oversold on the 1 hour, oversold. Everybody oversold. Go over onto the indexes, which I have on a different screen. Again, same thing. Everybody's oversold. But again, coming on that is what you're looking at from a zigzag point of view. And that is exactly what should be taking place here from a market point of view. ABC, ABC, boom, boom, boom. The ABC finishes, boom. Whether or not this is only the first wave down, we don't know. But it is your classic 535. And then from there, we should get a minimum of a three-wave rally to the upside. How fast that rally comes, how high that rally goes, nobody's going to go out there and try and go point fingers and saying this is the price level that you're going to go to. Yes, that's what we do, but that is not something that you want to be doing now and trying to put anybody under pressure to pick a pivot point to where we're going to. Saturday night, Elon Musk tweets out, since I've been asked a lot, I stock in several companies that make products and services that you believe in. Only sell if you think their products and services are trending worse. Don't panic when the market does. This will serve you well in the long term. This is Elon Musk basically telling everybody, buy the fucking dip. That's exactly what I see when I read this, that he's telling everybody to do. Now you come over here and you just had your Berkshire Hathaway earnings and quarterly meeting. And Warren Buffett has never spent as much money as he did this quarter, buying up as much as he could. Granted, he's buying Activision Blizzard, he's buying Chevron, Oxy, Hewlett Packard, but he is on a major fucking buying spree. And again, this is a guy who started when we were in the actual fucking depression. He's been through all of it. He doesn't look at this from a point of view from his own personal pockets. He's looking at it from an investor point of view because he knows he's on his way out. He's on his last legs. And what everybody needs to be doing when they're in this world is whatever they can do every single day to make somebody else's life better. Because, like my daughter showed, you're not going to be here that long. So make the impact that you could make. A good article over here on investing.com that you can read over. But again, I apologize for not being in there on Friday. Where we are, we're coming very close, very close. I still stand by what I said on Wednesday that the bottom is in. Might be off by a point or two, might be off by a day or two. The bottom is in, and I see us going into a grinded upward rally as we continue to progress to the upside, back up to the 4600s, back up to the 4700s, back up to the 4800s, and then from there we can justify where we are and start making judgments as to when this all ends. I'll see you guys in the chat room.